and now joining us. Andrew, hi, good to have you on the show. All-time highs, what next from here on? And, you know, I don't know if you started to put money right now in your new avatar, but if you were to put some more money, do you have good levels?
Yeah, well, first of all, it's been a great week, hasn't it? And I don't really want to kind of throw cold water on the index highs. But, you know, risks, you know, are there, and, you know, the risks are probably a little bit to the downside and upside. But, you know, to be honest, the momentum, but not only just the momentum, the sentiment globally is just, you know, very strong at the moment and very positive. So, you know, markets, you know, not just in India but globally will continue, I think, to kind of forge ahead. And, you know, we'll keep in this liquidity-driven rally. It's not just happening in equities, it's happening in bonds as well. So, you know, the party's on and you know, people want to participate in it at the moment. But I think, as you made in your introduction, you know, there's always something that will burst that bubble temporarily and bring markets back more towards fundamentals. At the moment, you know, as I said, sentiment and momentum is pulling us higher. Yes, we have launched a fund, and yes, we have invested, and you know, we're pretty much hedged to about 40–45%. Just taking into account, you know, where the markets are and the risks that you know, could unfold at any time. But you know, the long-short fund that we run, we don't think about market levels. We just try and make our returns over the year, whether the market goes up from here or down from here or sideways.
Okay. Andrew, hi, welcome to the show. A lot of people like you and me have been pinching themselves to see if this is a dream or indeed has the market really hit new highs, because we've not seen so much participation, especially from pockets like retail. But what's the sense you're getting here on? Do you think that this could be a sustainable upside? And is this the time for retail to put in fresh money to work?
So I think, you know, the thing that just concerns me a little bit is that, you know, valuations do remain, you know, pretty much stretched, and they've been stretched for some time. You know, it'll be interesting to see the quarter results, and you know, the kind of feedback we're getting from corporates is that, you know, the economy's not really picked up, and they've not really seen any V-shaped recovery since demonetization. So, you know, I think that could be, you know, some fundamental block for the markets going forward. And of course, if GST is implemented on July the 1st, which is looking like, whilst we all like, you know, GST in a longer-term framework, you know, it does have that potential to kind of halt the economy for, you know, 3 months or so, or disrupt the economy because of implementation problems. So, you know, earnings are already being brought down, actually, since the beginning of the year. Forecasts have been brought down from 20% to 15%, and I expect there's another leg down. But as I said, you know, you just can't fight the momentum at the moment, so it's we'll just have to see what you know, gives the market some time for either a pause or a correction, and that could well be the earnings season, actually.
Okay, Andrew, as we speak, the dollar index has made a move below the 100 mark. We have seen so much FI inflows over the last 3 or 4 days after having missed out for a better part of the big rally that took place before that. What kind of flows can we expect from here on? Because we've seen it in the past. Sometimes these flows, driven by momentum, can be humongous.
Yeah, so, you know, I think a couple of things happened, you know, for FII flows. I mean, apart from, obviously, you know, the good news in terms of the BJP winning the UP elections, and obviously that gave a lot of confidence for foreign investors thinking about the longer-term kind of consistency and for a reform process to continue. So that was the first part of it. The second part of it, I think, is after the Fed, or maybe in anticipation of the Fed raising rates, the concern was that emerging markets generally, you know, might suffer because of higher rates, then obviously a higher dollar, and that would impact the kind of being able to pay dollar-denominated debt, or the cost would rise. So India became a little bit more of a safe haven in that scenario, but obviously that's reversed, and emerging markets have continued to do well. So I think emerging market funds are obviously getting more flows, and India is a reasonably large weighting in that. So again, we're getting the flows from emerging markets. Maybe the perception that they would suffer has moved away, and the risk on trade for emerging market continues for the time being. So that's the good news. And the second part of the good news is that it looks as though the dollar, after having been strong for a good year or so, probably now will probably start to weaken as the kind of the growth momentum in Europe and then Japan later in the year starts to build, and that would probably mean a stronger euro and a stronger yen against the dollar. So that's the kind of outlook we have, and that's also very supportive for commodity prices as well going forward.
Okay, well, before we let you go, Andrew, this week, or for the last 2 weeks actually, it's been all about heavyweights. One or the other heavyweight has been exercising their might. Today, on Friday, it was ITC. Last week, it was HDFC. The week before that, it was Reliance. Where do you see leadership emerge from next?
I think if we're correct that the dollar will continue to weaken, then I would see that the commodities, and particularly the metal sector, would be a big beneficiary of that. Not only because global growth it will continue to kind of pick up, but also because weaker dollar would mean that commodity prices have the ability to move higher. So I think it's going to probably be the metals pack, which would be the one I think would surprise us in the next few weeks.
Okay, Andrew, thanks a lot for joining us with your views today, and have a good
Pleasure.
weekend.